What up, guys? I hope you all doing great. Wait a minute before I continue. Let me take a blunt. Let me take a puff real quick. I'm kidding, guys. Don't smoke weed when you analyze or when you trade forex. You're gonna fuck up. But who am I to judge? Matter of fact, you shouldn't smoke at all. Like I said, who am I to judge? Let's jump back into the market, guys. It's been a while since we've dropped some YouTube content, but we're back at it again. We've been trying to find a new strategy which will be, make you more profitable, which is smart money concept in institutional trading. I'm pretty sure you guys have heard a lot about it, and lately not a lot, but mostly, most of the traders are jumping to institutional trading, but then not all of them. So, but on my side, I moved from retail trading to institutional trading because I saw that it's much simpler. It's not easy, but it's much simpler, and it's better to look at the market this way, since the banks put their buy stop and sell stop at those levels. Those levels, guys, it's just support and resistance. If you know support and resistance, then you're good, guys. Then you are good. Support and resistant. God damn. Cool, ne? So if English yampala, guys, I'm going to speak Sotho or Zulu. But then I hope you're going to understand me. So guys, let's jump back to it. As you can see right here, I drew up some, I don't know, the mic might be cutty. Please bear with me, guys. I'm going to fix the problem, but please bear with me. So here we got, let's say the market was on a downtrend, okay? Say the market was on a downtrend. As you can see, we have our high here, our lower high, our higher high, lower high, higher high, and we had our break of structure at this level. Okay, we had a break of structure. Let's say you are a retail trader. Just look at it this way. Let's say this is a downtrend and you're going to draw your trend line, right? You're going to draw your trend line. This is what retail traders do, right? They draw their trend line. As soon as the market breaks out, they wait for a retest and then they trade the direction of the breakout. Sometimes some of them, they don't wait for a retest. They just, after a breakout, they jump into the market and then they trade, and then they wait for the 90% rule, which is the take profit will be in this level. Most of the traders which are retail traders, the strategy is simple, guys, but then the smart money concept is much simpler since it uses support and resistance where the banks put the market. Retail traders don't move the market that much, but the banks do move the market more than the retail market, more than the retail traders do. So the banks put their sell limit and buy limits at certain levels. So you do want to trade with banks, you do want to make a lot of money, right? But then if you are impatient on the market, then you can scalp. I also have a scalping strategy, but I'm not going to speak about it right now. Just bear with me, subscribe to the channel, make sure that you subscribe, and I'm going to drop more valuable content for you guys. I promise to be consistent this time. I'm back at it again. I've been making some, writing down some strategies which I'll, but enough with that, guys. Let me just explain this to you. Like I was saying, the market was in a downtrend. Retail traders, what do? They draw a trend line, wait for the market to break out, and then yeah, some basic shit, some basic stuff. Sorry for the language. Let me just delete these trend lines real quick. Not also lose it. Yeah, the market is in a downtrend, right? And then it's going to break out. It's going to the last previous high. If the market breaks the last previous high, it's eventually going to come back to test the last candlestick, the last bearish candlestick. It's going to retest the last bearish candlestick, which the last bearish candlestick, it's usually going to be at this point right here. The drawing won't be perfect, but most of the times the last bearish candlestick, which we call order block. I'm not going to go deep into beginners institutional trading and stuff like that. I'm in the middle. I'm in the middle. So you basically need to know how to trade in order to understand what I'm speaking about right now. Okay, which we call order block. This is what we call order block. So the market is eventually going to come back to the support level, the last bearish candlestick. and retest it and shoot up. I'll explain to this on the live chat, but for now I just want you to understand. And there's not much different with retail trading. Just that retail trading, they find these patterns even in the middle of the chart, the impulse correction and stuff, shit like that. I used to trade retail trading, but I moved to institutional trading because I want to make a lot of money. I want to trade with the banks. I want to trade with the people who move the banks. Okay, just stick with institutional trading if you want to make a lot of money and if you want to stay consistent. This is just the basics of it. I haven't gotten deep into it, but if you stick with us, make sure that you subscribe. Like I say, you're going to get valuable information. Let's take a look at Euro USD. We're going to analyze Euro USD and GBP USD, USD JPY and S100. I might not analyze all of them because I want to make the video as short as possible. So right here, what we have is this. I was looking at this on Thursday, if not Wednesday. I don't trade on Fridays. My advice to you is to not to trade on Fridays and Mondays. Okay, today is Sunday. We're doing a forecast, of course. Today is Sunday and tomorrow is Monday. The movements that the predictions that I'm going to analyze here, they might not happen on Monday, but they might happen on Tuesday or Wednesday or Thursday. The market is a bit choppy on Mondays and Fridays. I prefer trading on Tuesday, Wednesday, and Thursday. 3 days for me. Okay. I was looking at this last week, Wednesday, I think, if not Thursday, like I said. So the market, as you can see here, like the example that I showed you, the drawing that I showed you, the market went on a downtrend. Okay, the market went on a downtrend. It was going on a downtrend, a short downtrend for a little bit of time. This is in 1 hour time frame, as you can see. And it got to, as you can see, the market broke the structure. Okay, the market broke the structure, as you can see. Usually I'll label this as a BOS, break of structure, also known as change of character as well. Okay, don't confuse it. They're basically the same thing. Let me just do this. The market was on a downtrend and it broke structure, changed character, which indicates that the market is now going to be on a bullish trend. As soon as the market breaks the structure, it has to come back. No matter how long it may take, it has to come back to the last bearish candlestick. That's where you'll be putting your support level. This is where the banks will put their buy limits. As you can see, guys, the price played along with me. Market went on a downtrend, as you can see, broke structure right here, shot up, came back to this level right here, came back to that level again. The last bearish candlestick, it came into that level. As you can see, the stop loss is just below. It's at this low, just exactly at this level. Before shooting up, the market shot up after it retested that level, and then it broke structure again. As you can see, guys, the target was this level. The target was at this. Sorry about that. What am I doing? The target was this level right here. My first target. That was my first target. As you can see, the trade was successful. We did eat Euro USD. We did eat it, as you can see, and then it came back. So what I think the market might do next week, I don't know when, but I guess Monday, exactly Monday. As you can see, we have an order block right here. I will speak about confirmation entries. Entries, everything, guys. You can analyze perfectly 1 hour, H1, daily, W, but your entries should be on 15 minutes time frame or 30 or 1 hour. Okay. There's fractal what's that, fractal confirmation, not literal fractal indicators. I'm not talking about indicator. I'm talking about confirmational entries when it comes to smart money concept. I'm talking about, to make sure that your entry is 100% on point. Entry is everything. Your analysis can be perfect, and when you enter a trade on 1 hour, the market might give you a drawdown, drop back a little bit, might be on some losses before going into profit. That's what I'm speaking about. So on your smaller time frames, that's where you get a sniper entry. That's where you get confirmational entries. But then I'll go deeper into that on another video. Just make sure that you subscribe and turn on the notification bell not to miss out. I know a lot of people are making content such as this, but bear with me because I have the secrets of smart concept institutional trade. I'm not yet that much successful to a point where I have my own house, but I withdraw daily. Come on, guys. I withdraw daily. I don't care if it's 1,000. I do withdraw daily. You feel me, guys? As you can see, the market broke structure. So basically, when the market breaks the first structure, it's an indication that the market is going to go up. The market is going to do what? Go up. It's a change of character. The market is now going up. For example, like I said with the drawing that I showed you, just like it's exactly doesn't have much difference. It's exactly like retail trading. For example, this is what you have. But as you can see with retail trading, you become a little bit late on entries. You become a little bit late on entries. As you can see, if you was a retail trader, this is a breakout for you. This actually is a breakout for you, and the market comes a little bit to this level. You see, it's a breakout. Most of them move like draw a support level here. It's the same thing, but with smart money concept, it's much easier. It's much easier. You see the market pretty much easy. But what I think the market will do on next week, what I think the market will do is, as you can see, the market structure, which is a continuation, by the way, it's a continuation. The market is still on an up. So if I say, for example, I enter a trade right here, which I did enter, but I exited on the resistant level. Okay, I entered my trade. I held it until it hit my take profit. Yes. Again, when the market breaks out again, you check your last candlestick that went up. I mean, your last bearish candlestick. That's the candlestick that you check. In this case, if I didn't exit and put more trades for myself, put more trades, I would have held my trade. This will be my second trade. I have one trade now going, which I'm holding. My take profit will be maybe a little bit higher than this. Maybe my take profit will be, yeah, I opened my trade. This is my first trade, and this is my second trade, right? And as you can see, the market broke out, it broke the structure. It's still a continuation. It's still on an uptrend. Okay, therefore I put my support level right here on my last bearish candlestick, and then I wait for the market to retest it, and then I enter my trade. This will be my third trade. Okay, this will be my third trade. For example, if the market does this, this is how I think the market will move. It will break structure again right here. The last bearish candlestick, let's say the last bearish candlestick will be at this level. You enter another trade, you hold up to your take profit. But it depends on how the market moves. Don't forget to put your stop loss. Okay, it depends on how the market will be moving, guys. Okay, so this is how I think the Euro USD pair will move and will play out. Let's jump quickly into GBP USD and let's see how it's playing. As you can see, guys, we can't be perfect, or we can't anticipate the market perfectly. Here, same situation, just like Euro USD. The market was shooting down, was on a downtrend. Okay, the market was on a downtrend, and then it broke structure. It broke the first structure. I'm just going to name it as change of character because it's the same thing. Okay, it's going to, like, this is your last bearish candlestick. This is our last bearish candlestick. When you go on a down, on a lower time frame, that's where you find entries, perfect entries, make sure, like, added confirmations. That's where you're going to find them. So right here, I entered a trade. I entered my buy. Okay, I entered a buy right here on Thursday. I think it was Thursday. Same day when I traded Euro USD. My take profit from here, from that level was here. Okay, so my trade did hit my take profit eventually, but came back as well. As you can see, the market came back. It was supposed to, react at this level. As you can see, we broke structure again as we continue to the upside. The market should have, what the market should have done, should have come back to this level, play out like, then continue its uptrend, but the market broke out as if like it's going to continue its downtrend. We don't know, it might continue the downtrend, but this was maybe like a short buy signal or stuff, shit like that. Sorry for the language again. You feel me, guys? I hope you understand. This is it's easy. It's easy. I'm going to provide you with free content. I'm not going to make you pay anything, but if you want signals, that's what I'm going to, like, if you are busy, you can't analyze for yourself, then that's where I'll be providing service for signals. My mentorship is right here on YouTube, free of charge. I don't have any cost. I don't have anything. My course is here right here on YouTube. So make sure that you subscribe to the channel and make sure that you stick with me. Most of the YouTube traders, what they do is that they offer, they sell the courses, but I'm not selling anything. I'm just maybe selling signals for those who are busy to analyze, who are always at work, working, don't have time for the market. Then I'll provide signals for you. Hit me up. Lifetime signals. I got lifetime signals. I got monthly signals. I got monthly signals and lifetime signals. Monthly is 250 and lifetime is 750. You feel me, guys? So yeah. Right here, I think what the market did is that the news, I think they moved. It's Friday. It was Friday here. I still remember. This right here was Friday. This right here. It was Friday. That movement was Friday. That's why I don't like trading on Friday. The market does funny stuff on Friday. Okay. So I entered my trade here. What I think is going to happen is that next week, what I think next week is going to happen is when the market breaks out here. It broke out. Okay. I think the market is going to, move like this, come back to this level, and sorry for the drawing. The drawing is not perfect, as you can see. The drawing is not that perfect. The market broke the structure on a lower. It might continue its bearish movement, or if not, it might still go up. This is a support level, as you can see. After all, this is a support level after all. Okay, this is how it might react. It might retest the support level, continue its uptrend to the upside. Okay, let's quickly jump into NAS 100, because I'm not going to analyze any other currency. Let me jump into NAS 100 because I know you guys love NAS 100. So this is how I think NAS 100 is going to perform. Let's go to H4, since NAS 100 needs deeper analysis. This is how I think NAS 100 do. As you can see, the market was on an uptrend, short-term uptrend. As you can see, guys, what happened is that the market broke structure, change of character, as you can see. The market changed character twice, broke structure twice. Okay, I think, okay, just after us determining the break of structure, we're going to go to H1 time frame. As you can see, there's a lot of liquidity that needs, and the liquidity that needs to be collected, and the imbalance that need to be collected as well. But the market might just, so stick with me, guys. As you can see, the market might reverse to this level here, might reverse to this level and continue its down trend move on the downside. Okay, my drawing might not be perfect. I can't draw exactly how the market will be moving perfectly. This will be our order block. When you go on the lower time frame, you're going to find the last the last bearish candlestick. I like to trade NAS 100 on 15 minutes. So this is where like the market might reverse. Okay, as you go to 5 minute time frame, you're going to maybe like find the proper order block. You might find a proper order block. Yeah, this is the order block, the last bullish candlestick. Okay, the market will reverse there or reverse at this level, the extreme level. I see there's a whole lot of other blocks, guys, but I don't think the market is going to come back at this level anytime soon. I think is that the market will reverse at this level. The market will go up at that level before continuing its down movement. As you can see, what a retail trader will do is to draw a trend line right here. It's not much difference, guys. As you can see, it will draw a trend line right here. This is a breakout. Okay, they'll take this as a breakout. I'm not going to draw the trend line perfectly, but this is a breakout. Okay, it hasn't retested any trend lines or stuff like that, but the other problem is here. Okay, the market is here currently. It might go back up, retest this level, or it might continue going down. What you need to do is to just find continuation patterns, not real continuation patterns, but institutional continuation. It will go down. We are on a downtrend for the whole week next week up to this level right here. Okay, guys, so that's it for this lesson, guys. If you need deeper lessons about institutional and smart money concept, please leave a comment down below and subscribe to the channel. Don't forget to subscribe to the channel. My mentorship is free right here on YouTube. Please support me, guys. Subscribe. I appreciate your support. Peace, guys. I'm out. I hope for a profitable week next week. Cheers.